Welcome to the 1031 Exchange Passive Income and Investment Series. This show is brought to you by 1031navigator.com. 1031 Navigator is the best way to plan, execute, and complete your 1031 exchange with peace of mind and confidence while saving you both time and money.
Hey everybody, Thomas Morgan here with 1031navigator.com. Hope you're doing well today. This episode is kind of a fun one for me. It resonates personally with me, but also in the business realm. And this episode is related to green and sustainable 1031 exchange investments. And this episode came about from a couple different reasons. If you've listened to some of the other episodes about opportunity zones and impact investing, we have a side project or a sister project called Compound Global, and you can learn more about that at compound.global. And Compound is essentially an impact investment fund and studio that creates, manages, and sources impact investments. Impact investments are essentially triple bottom line investments. So they have a financial return, but also a social and or environmental return as well. And through that work we're doing over there, we've had several high net worth investors come to us and say, we'd also like to explore doing some sort of sustainable investment or green investment. We've talked to people about climate change investments, different thematic investments where there's definitely going to be a financial return, and there's definitely tax benefits, tax deferral, things like that that come about because of the Opportunity Zone program, and in this case, because of 1031 exchanges. But basically, personally, I've been involved in commercial investment real estate for almost 20 years now, done over $1 billion of investment deals in most of the states around the country, and looking to expand into things that have more meaning. I find a lot of meaning in helping families and clients meet their investment goals and managing the risk and hitting their financial targets, stuff like that. Things I talk about on this podcast, but also looking to make more of the work I do on a daily basis more impactful or contribute positively to society and nature and the world and things where we live. Oddly, commercial real estate is definitely not nature focused or environmentally focused. So we're trying to put a little twist on it and actually do things that, to the extent we can, essentially make sustainable and or green type investments. But I've had clients come to me and say, look, I'm making enough money. I still want to preserve my wealth, but I want to make a little bit more money, but I want to feel good about my investments, and I want my investments to be good for my kids and my kids' kids, but also for the planet we live on. And I don't want to feel like my investments are bad for the environment, bad for the planet. I want to sleep well at night, and I want to make some kind of positive change. And that's where the impact investment comes in. But this episode, this is 1031navigator.com, how we can structure those type of impact investments as 1031 exchanges. So that's what this episode is about. Excited today to cover 7 different investments that we've kind of been working on or thinking about that would be available for 1031 exchange investment under kind of an impact investment thesis. But basically, if you remember, or if you know much about 1031 exchanges, it has to be what's considered like kind, and that's a IRS definition. But like kind is essentially real estate And the three words are the asset needs to be used in business, trade, or investment. You can sell land and buy land. You can go from industrial to apartment buildings, vice versa. You can go from retail to land, stuff like that. And in some cases, you can even go to ownership, interest in a piece of real estate under what's called a DST, Delaware Statutory Trust. Like kind is not securities or interest in LLCs or stocks or bonds, commodities, stuff like that. So it's really related to real estate ownership and going, like kind asset. But going back, the three criteria is the asset that you're selling and the asset that you're trading into have to be used in a business, trade, or investment. So these 7 things we came up with, I think, would qualify. Of course, check with your tax professional and your CPA in your personal situation based on what you've sold. But here's the list of 7 things that I think could contribute positively, create positive financial returns, positive tax benefits, but also contribute either to society at large or the world at large. You can learn more about any of these things we're talking about at 1031navigator.com/green. Again, 1031navigator.com/green. We'd be happy to evaluate your needs or investment goals and see how any of these assets might fit into those. Number 1 is an easy one, green buildings. So essentially buildings that have been built new or retrofitted or remodeled to meet what's called the LEED certification, which is LEED. And I think it means leadership in energy and efficiency design, something like that. I don't have it in front of me, but LEED is LEED certification, and that's a certification from the U.S. Green Building Council. And then there's also what's called the Energy Star certification, which is, I think, from the EPA is a certification you can get. But a lot of office buildings these days, schools, buildings that have a lot of occupants, day-to-day occupants, some residential are becoming just, LEED or Energy Star certified just because the occupants want clean air. They want low VOC, low pollution, disruption, in their environment. Then the Energy Star certification is actually important to energy intensive buildings like retail or industrial or manufacturing. A lot of supermarkets do Energy Star, and believe it or not, actually Walmart and Kohl's, some of the other big retailers, are super into LEED certification, not because of the kudos they get or because of the PR, but because of these days it's actually saving money and it's contributing to their bottom line. If you walk down the supermarket aisle at almost any grocery store these days, or any new grocery store or Walmart, for example, you'll notice that the LED lights in the coolers go off when no one's in the aisle, and then you walk down the aisle and they'll come on one by one as you're in the aisle, and as you walk away, they'll go off. And they've noticed a huge savings in their electrical bills and their heating, cooling cost, things like that, because of the LEDs don't burn as hot and they use less energy, and they can come on and off with motion sensors. If you go into a Walmart or Lowe's, you look up at the ceiling, you'll see actually a lot of sun skylights, or essentially solar shades that open and close depending on what time of day it is and where the sun is in the sky. And they use natural daylighting when the sun's not direct. And then when the sun is direct, they close the shades to reduce the heat gain. But those, a lot of retailers are doing that. But green LEED certification is a good way to meet kind of the traditional commercial and investment real estate goals, cap rate, price per square foot, land, building, tenant credit, all the other things we talk about on this podcast. But then you have the added benefit of feeling good about the building you purchased because it, isn't harming, or it's, doing less harm essentially to the environment. And it's a better, quality asset. Typically those assets, there's been a bunch of studies, those assets get more rent per square foot and have higher occupancy rates because they're just a higher quality standard for tenants and occupants to be in. Number 2 are renewable energy projects, and these ones can be a little tough just because of the way a lot of the energy companies structure them. They typically separate the FF&E or the personal property out from the land, but there are several providers out there that you could, you actually buy the land and you buy the improvements, the FF&E with it. And you get either a percentage of the energy produced or you get an income stream from the leased equipment. That one, these can be a little tricky with solar or wind, again, just because of the way the actual energy generation is structured. But that's a good, good land type investment, real estate type investment that it's a non-carbon producing or low carbon producing energy. And typically these are long-term leases, 15, 20, even 30 years, or, energy buyback programs. So they kind of fit in line with the triple net assets that we're talking about on the other episodes. Number 3 are organic and sustainable agriculture or even timber, sustainably harvested forest or sustainably managed forest. People are, looking at, a couple of people we're working with right now are looking at organic blueberry farms and organic wineries. And, they're kind of hobby type farm or investments. They're, when these are like $2 to $3 million, so they're not commercial grade or, big institutional grade assets. But if you get into the 10, 20 million range or more, then those become institutional caliber investments with institutional caliber returns. And, food is a big trend right now with how fast the population is growing and, how we're going to be able to feed everybody. And, a lot of people want to make sure their food is clean and doesn't have pesticides and whatnot. So this is another easy one. Land, income. The biggest thing is just making sure you have an operator to actually operate the business portion of it so that it produces the income. Number 4 are what are called conservation investments. Nature Conservancy is structuring a bunch of these. People are doing stormwater runoff agreements, upstream water quality type investments. Even Coca-Cola and PepsiCo are doing conservation investments because they know they need clean water to put in their beverages. So conservation type easements protect the watersheds, protect the land and the wildlife habitat. Climate change investments would fall under this category of preserving trees and greenery that suck up the carbon. But these also provide tax benefits when you put things into a conservation easement, and or some of the ones we're working on with a couple different land trusts are essentially long-term sale leasebacks where we'd enter into a 10, 15, or 20-year lease with the land trust. And instead of the land trust having to raise, let's say, $2 million out of pocket, our investors put in the $2 million and the land trust pays a rental rate. So it achieves the same purpose of conserving the land, but they don't have to do a big capital campaign to buy the property. Our fund essentially buys the property, and then the land trust leases back the land, achieves all the benefits, but then they only have to come out of pocket. Like essentially, we set the rent at like 5 or 6% of whatever the cost of the land was. So these are very similar again to triple net type investments, where instead of your tenant being Walgreens or Dollar General, et cetera, the tenant is the land trust, and you get the same type income streams. The credit isn't going to be as good as a Walgreens, but a lot of these land trusts are financially sound and stable and have big funding behind them. So, we build in some risk modeling with whoever's going to be signing the lease on that. Number 5 are what are called Brownfield investments, and these are a little more complicated because of the environmental liability and risk with it. But a lot of people get scared of the word brownfield or superfund, but that's actually a way to get federal money and state money if a site can be classified as a brownfield or a superfund. There's a lot of money available to clean those up, and you typically use environmental firms and soil management practices, stuff like that. But those are ways to clean up old industrial or manufacturing sites or old gas stations, things like that, and then convert them to a more modern use. And I think there's actually a lot of opportunity for higher yields on this. They take more time, more paperwork, more legal costs, stuff like that. But typically, I'm not an attorney on it, but the federal government, as long as you do your, I think it's called due inquiry or adequate inquiry, there's a name for it. But essentially, as long as you do your phase 1, phase 2 reports within a certain time frame before buying the property, you've done your due inquiry, and the liability does not transfer to you as the new landowner because it shows where the contamination came from and who's responsible for it. And then you're protected under the Superfund or Brownfield legislation. But a lot of these sites can take otherwise blighted properties that a lot of people didn't want to touch or deal with and turn them into normal commercial real estate type investments. Believe it or not, a lot of Walgreens are built on Superfund and or brownfield sites that have monitoring wells, because a lot of Walgreens go into where old gas stations were or old dry cleaners were. And at some point, someone contaminated the land, and then the developer cleaned it up. Walgreens knows about it. They put in a monitoring well, and someone comes and monitors the well water and the runoff and the soil test and whatnot. And those eventually get cleaned up over 3, 5, or 10 years. And you can really make the economics work on those. Number 6 is kind of a combo of some of the things we've been talking about, are redevelopment or reuse projects. Big box reuse is a big trend right now. The big retailers, Sears, JCPenney, Kmart, are being put out of business from Amazon, whatnot. So how do you reuse those buildings and turn those into something? People have done libraries, community offices. There's even a spam museum in a former Walmart in the Midwest. Go-kart tracks, self-storage. There's a big trend on reusing those big box stores and trying to figure out what you could do in those. Historic preservation would also fall in this category, or what is called adaptive reuse, and that's taking one building that was built for something and then adapting the use to something else. A lot of the loft developments, that's adaptive reuse. Or you've seen armory buildings that were built during the World War II. There were congregation type halls, places to bring in equipment, store goods, people, etc. And those are being turned into gymnasiums, sporting equipment, or fitness facilities, things like that, or music venues. But pretty much any reuse or redevelopment project would be an impact investment into real estate as well. Then the last one, number 7, kind of covers a lot of these things as well, but it's more of a thematic type investing thesis where some people come to us and they're saying, hey, look, I love animals. What kind of deal can you do that involves animal shelters? So you're talking to different folks about, again, sale leasebacks. These are strategies we use in our day-to-day triple net business in retail and industrial type investments. But essentially, our fund comes in, buys the real estate, and then we enter into a long-term triple net lease or modified gross lease on the asset. So it has all the normal commercial real estate fundamentals, but then also has some sort of societal or environmental thesis or thematic to it as well. Along the same lines are food. Certain people want to invest in like Whole Foods deals or natural grocers deals, or what are called food deserts, where there's people in cities, for example. I think the drive time is like 20 minutes or something like that, where if they can't get fresh food within 20 minutes from where they live, it's called a food desert. And believe it or not, inner cities, a lot of the cities around the country have major food deserts because the only kind of food people can get is canned food or convenience store type food, and they can't get any fresh produce. So thematic, people go in, they say, I want to have this tenant who focuses on organic goods, or I want to just go into food desert type areas and invest my money in buildings or tenants that will fulfill those needs. Another thematic one is homelessness. There's actually a lot of studies around showing that if you give homeless people a place to live, it actually helps them more than trying to just put them in a temporary shelter, because they take pride of ownership, and there's certain types of funding and certain programs available where essentially the rent will be subsidized. So as an investor, you get rent from the different homeless organizations, but then also as the people get jobs and have income come in, they can pay rent themselves, and they have a pride of ownership, and they essentially take, not real ownership, but they take occupancy ownership of the property, pride of ownership type thing. And the investor gets an income stream from different sources to solve the homelessness problem. Climate change goes back to whether or not you believe in climate change or not. Conservation type investments covers this. Trees, water, animal habitat, stuff like that is thematic. Some people are investing in clean water, so watersheds, streams, wetlands. Wetlands mitigation has been a big tax deferral technique for a long time. And that's another one that would qualify for 1031 exchange, is wetlands mitigation. Medical office is a theme I'm seeing, where people are seeing baby boomers age, and they like the idea of just investing in medical type properties. We have been talking to one gentleman about essentially what they're called is telemedicine or telehealth clinics, where a lot of the population, similar to food deserts, don't have access to basic medical facilities and basic medical testing. And so these telehealth clinics, they operate, the doctors and the nurses and practitioners or whatnot are remote, like in call centers, accessible by video and telephone, but then they have to get diagnosis. So one strategy we're looking at is telehealth clinics, where people can actually go in and get those, the blood tests, the fitness tests, cardiograms, things like that they otherwise couldn't get because there's just no services. They have to drive 30 minutes or an hour or even more to get those basic tests done. So that's an investment strategy. And then, the last one along the thematic, falls under the just same triple net. I recently sold Goodwill property. People like the Goodwill business model. They employ low income or people with disabilities. They provide a need to the community with reusing of goods and recycling of goods. People like Whole Foods, people like natural grocers. Even people can justify green investments in Walmart and Kohl's because those are, green type buildings. And I've even had investors say, Starbucks provides jobs, they provide college assistance, they provide healthcare. So I feel like that's an impact investment when they buy a Starbucks. That's my list of green, sustainable type investments that would qualify for 1031 exchange. Would love your comments and questions. You can call the listener hotline at 970-300-1994. Again, 970-300-1994. Or you can go to 1031navigator/talk, and you can learn more about different types of investments we're working on at 1031navigator.com/green. Again, that's 1031navigator.com/green. And we'd love to hear from you. Thanks, and talk to you soon.
Thanks for listening to the 1031 Exchange Passive Income and Investment Series. To help create, grow, and protect your wealth with 1031 exchanges and triple net properties, visit 1031navigator.com or call 1-866-539-1777. Again, call 1-866-539-1777. Make sure to remember to ask Thomas about our 1031 VIP program. You can put thousands of dollars in your pocket on your next 1031. If you enjoyed the show, be sure to subscribe, rate, and review it where your podcasts are peddled. And if you have a friend considering a 1031, make sure to share this show with them. A referral is the best compliment we can receive. Thanks for listening, and see you again soon. And remember, this show is provided for your informational and educational purposes only. Be sure to check with your accountant, lawyer, and/or other tax professionals and advisors before relying on this information. Although the information contained herein is believed to be accurate and reliable, we do not guarantee its accuracy or completeness, and it is provided without warranty. Common sense is the best practice.